Welcome to your presentation on hospitality-specific ratios. Many of these should be review for you from other courses that you've taken, but some will be new. So when we look at hospitality-specific ratios, there's going to be different ones for hotels and restaurants. Let's take a look at hotels first. So, hotels, the main three that you have definitely seen in other courses are your occupancy percentage, your average daily rate, and your RevPAR. Occupancy percentage would be occupied rooms or room nights divided by available rooms or room nights times 100. That would give you your occupancy percentage. Okay? So that's of all your rooms available, what's the percentage of rooms that were occupied? Your average daily rate would be your rooms revenue divided by how many occupied rooms or room nights you have. So of your revenue, you would find out how many rooms are occupied and find out how much you're actually receiving per occupied room. Now your RevPAR combines these two, and that's why this is a KPI, a key performance indicator, that's looked at quite a bit by hotels. There's two ways of discovering it. Now, many people remember that, well, occupancy percentage times your average daily rate gives you your revenue per available room. But just as easy as dividing your rooms revenue by available rooms or room nights. Remember, if you say this out loud, revenue per available room, revenue per available room. Okay? This should all be quick review. Two that you may not have seen would be your GOPAR and your cost per occupied room. Now your GOPAR looks at your gross operating profit divided by your available rooms. If you remember, your gross operating profit is your profit after you've taken away all of the controllable expenses. So your gross operating profit is the profit that your managers had control over. Okay? After this, when we start to go down through an income statement, we start to include fixed expenses, non-operating expenses that a manager has no control over. Okay, so this would give us once we take away all of our controllable expenses, how are we doing per available room for our gross operating profit? Okay, so gross operating profit, or GOP, divided by available rooms, room nights. Okay, our cost per occupied room is going to be our cost under examination. So this is typically within our rooms department. We want to say per occupied room, okay, what we're using. Okay, so how much cost is allocated to one occupied room? So the cost divided by occupied room. This is kind of like a per unit. If you think back to per unit evaluation, analysis of an income statement, we're actually finding out our cost per occupied room in some instances for your rooms department schedule. Okay, we're dividing our each revenue and expense line by occupied rooms. So we're finding a cost per occupied room when it gets to the expense line. Okay? Some hotels will have goals for this, and this will be a telling indicator of whether we're spending too much, not enough, more than last year, more than was budgeted on a per occupied room basis. Okay? For restaurants, there's a few other ratios. Now, the cost of food sold. So if you take a look at our income statement, we see food costs as $1. It's not just a very easy mathematical formula to find out what the cost of our food was. Okay? We actually need to first start with our beginning inventory and then add what we've purchased. Okay? So what we had at the beginning for inventory and food in dollars, okay, we would take our inventory and then find out what each item is worth to find out overall the value of our beginning inventory. We would then add in how much we purchased over whichever accounting period we're looking at. So that would be how much we purchased plus our beginning inventory. That's how much we had available throughout this accounting period. Okay? Then we would take out our ending inventory, what we have left at the end of this accounting period. Okay? The difference is going to be how much was consumed. Okay? So how much food was consumed over that time. So again, beginning inventory plus what we purchased is what we had available for sale, minus what we had left at the end is how much was consumed. Okay? So then we have to make sure that we take out any transfers that were out, Okay, transfers out, we have to subtract. That means transfers to other units. That means transfers from the kitchen to maybe the beverage area. So any fruit. So if I purchased limes, lemons, and oranges within my food costs, well, if I have to transfer that over to the bar, I have to make sure that I transfer it as a dollar value as well, or else I will take on that cost. We would then add value transfers in. Okay, so this would be where we would, if we took in any kind of transfer, cooking wine from the bar would be within a food and beverage environment, but this would also be from unit to unit. If I took in money, if I transferred food from another unit in my chain, basically. Okay? And then we would subtract our employee meals, the value of our employee meals. Okay? That would give us our cost of food sold. So it's very important to understand how we get to this. Okay, so again, we have to go beginning inventory plus purchases minus ending inventory minus what we're giving out. Okay, adding what we're taking in as a transfer, and then taking away employee meals. Now our cost of beverage sold, it's very similar, with the big difference being that the fact that we don't do a subtotal. Okay. And the other thing is we don't have employee meals because you don't have employee beverages. So it would just be beginning inventory of our beverages plus what we've purchased. That gives us what's available for sale, minus what we have in ending inventory, minus our value of transfers, adding in what we took in as transfers. That'll give us our cost of our beverages. So to make our beverages, how much did it cost us actually once we take everything into account? Okay. So take your time with these. They're within your textbook, and make sure you feel comfortable with them. Now your food or beverage cost percentage and labor cost percentage, these are going to be very big cost percentages that we pay attention to because there are prime costs, remember? Okay. The big thing to remember is we're always going to compare food sales and food costs, beverage sales with beverage costs, labor costs with total. That's the big change right there. Okay. So it's always going to be our cost of food or beverage sold divided by our food or beverages sold. Really, you can think of food cost divided by food sales, beverage cost divided by beverage sales, then times it by 100 to find a cost percentage. The very important thing is always to remember we're going food by food, beverage by beverage. Again, we would have done this in your common size analysis of your income statement, so you should feel comfortable with this part. Our labor, however, we're always going to compare our total labor or individual labor lines on an income statement to our total sales and then multiply it by 100. Okay? We will always go that way, and then we can start to evaluate how we did for labor cost percentage. Why do we do this? This is again compared to industry standards, compared to budget, compared to previous years. We want to see how we're doing when we compare labor to total sales. These would be two that you may not have seen as much. Now, our average sale per guest is going to be our check average. Okay? This is again a per unit analysis that you would have done on the income statement, where we compare total sales to number of guests served, or what we refer to as a cover. Okay? That'll give us in dollars what our check average was per customer. This always really gives us a per unit, a really individual sale per guest, which may sometimes be more telling, may give us more in-depth knowledge of how we're doing on a per guest basis. Because sure, our revenues overall may have gone up, but did our check average go up? Okay, we want to make sure that that check average is also going up. And if it went down, what's going wrong? Okay. Our seat turnover is how many times we're turning over the seats in our restaurant. Okay, so we're going to go our covers served, how many people we served, number of guests served, divided by the number of seats times number of operating days in a period. Okay, now whatever the operating days are in that period, that's the covers we have to look at. You have to make sure you're doing that, right? Because you want to make sure that you're using the covers served in an accounting period to the number of operating days in that operating period. That's a very important part. Okay? And that'll tell you how many times you've turned over every seat in your restaurant during that operating moment, during that accounting period you're looking at. Okay, it can be an operating period, could just be a day. It could be breakfast. You want to see how quickly you're turning over your seats. It could be lunch. It could be dinner. Okay, it could be just for a full day. It really depends on what you want to analyze on how you're doing as a restaurant. So covers served, again, how many people you served divided by the number of seats times the number of operating days in the period you're evaluating. Okay. RevPASH has become a very big analysis tool in restaurants, okay, where you're evaluating the revenue per available seat hour. Now, before we even get to the RevPASH, we need to figure out how to figure out available seat hours. So to find out our available seat hours, we want to look at number of seats and multiply it by the operating days. Okay, so how many operating days in the period that you're evaluating? Okay, that'll give you the total number of seats available during that amount of time you want to look at. You can then multiply it by the operating hours because we're not always open for the same amount of time depending on the restaurant. So these operating hours are the hours that the restaurant is actually open. Okay, that will give you the available seat hours. Okay, and then once we have that number, we can do our total sales divided by our available seat hours. So, so why do we do RevPASH? Really, we want to, a lot of time you're going to want to do this on an hourly basis because at that point we can identify when during a day an operation is most efficient at using seating to generate revenue. That's really what RevPASH is. It evaluates your ability to generate revenue on an hourly basis. Okay, you want to make sure that you're always using the right period for when you're looking at the calculation for available seat hours. Okay, but if you do it on an hourly basis and you start to evaluate different meal periods, you can start to see where you're making the most amount of revenue per available seat hour. Okay, so these are all specific hospitality specific ratios that you should feel comfortable as you move forward in this course and in your other courses.